Welcome. First macro point of view commodity news show in 2023. So at the beginning, please accept my best wishes for all of you for this new 2023 year that is ahead of us. So today we're gonna focus on more likely forecasts for the next couple months for the commodity markets, and we'll see what we can expect. And to start, we can say one word that it's probably in many newspapers around the world, that is recession. And I'm not gonna follow the mainstream media and give you the reasons why the recession is a problem or why it's probably occurring right now, but we for sure have a seriously slowdown in economical words, in economical area, and with industry, and with also retail sales and everything else. But the recent news about the China, where some mills of non-ferrous metals decided to slower their production or even close it 3 weeks before the Chinese New Year's Eve, which is this year 21st, starting to this year in 21st January. So with the mills that closing 3 weeks earlier, we are talking about the huge drop on metal production. I'm talking about the aluminum, zinc, tin, and copper, all non-ferrous metals, and they closing up or slowing down because they see lower demand from both China internal demand, and both second, international. So they see a slowdown or even a recession, so they are cutting production down. This is regular thing, this is normal thing, but we also had those cuts in Europe even from the winter 2021-2022, when there was first high jump of gas prices, of energy prices, that makes some mills slowing down or closing in Europe. This year, of course, price of energy prices rise after the Russian invasion on Ukraine, and then we've got those mills also slowing down and closing in Europe. And this recession, and now we've got those inflation, the CPI is rising, the PPI is rising, everything is rising. On some sectors, the production costs rise over 30%, and it's not only about the energy costs, but in general, with everything, with the payments, with commodities and resources and everything else. So it's a huge problem, and it's another point that someone else is still seeing it. If they decided to close the mill, it's a huge thing. It's not a light switch on and off. You need some days and time to restart the mill. So it's a huge problem, and we must all be ready for it, because there is two ways, of course. First, the recession won't be so deep as mainstream media expect, and then we'll see a demand gap when we have a bigger demand than the current production is. So we'll have a period of time, probably a couple of weeks, when the non-ferrous metals and other things, other commodities will rise rapidly. Second thing, the recession will be as expected, along probably more than 12 months recession, when it shouldn't be a problem, but the commodity prices will fall. So it's both ways possible, but we have to take a closer look on the details and data that will be published in the next couple weeks. So now let's take a look on the markets, and we'll talk about a few other areas, other commodities. I know that today United States, Great Britain, and many countries has a day off, but still, let's get ready for 2023 on commodity markets. As you can see, the copper prices didn't change much in December. They will stay most in the same line between 8,300 and 8,600 per ton. And it will probably won't change anytime soon, as we don't have anything that might change it. We have some production issues, we have some demand issues, so it's all in the balance at the moment. So everything that will throw the balance off on the copper market will affect the price, and it will be probably very, very sharp. It might be both rising the demand or rising the production. So of course, rising the demand will rise the price, and rising the production will drop the price. But please remember that rising the production, the digging of copper ore, doesn't mean it will rise the copper allowed for the market, as the melting problem is that the production will rise probably faster than melting capacity of the mills. So we will see probably a gap between those two numbers, the gap about 2-3% per year. So it might be also a thing that you wanted to see, to give a closer look in a very near future. So also still problem with the water supplies for the mines in Peru and Chile, where it's two biggest copper sources for the world, and there is a water issue for the mines. So take a look closer on this, keep an eye on those two markets, those two countries with their problems. Of course, there is still national miners in those areas of mines that's still protesting in both countries, so this also might affect the Las Bambas mine owned by MMG, the Chinese MMG Ltd. Drop, as far as I remember, because I'm calling back my memories, and I think they drop production about 30% due to strikes and road blockades in the last year. So it's a huge amount of copper that won't reach the market. We're still quite high if we take a look on a wider place, because of course we've got higher prices earlier, but take a look before the pandemic, well, in general, much lower. But please remember that the production costs on some sectors regarding commodities rise about 30%. So what was 6,000 a couple years back, now it's 8,000. So we can see it on the charts. The fuel thing, the oil thing, crude oil thing is rising last session before the New Year's Eve, and we don't know how it's gonna be. Everyone expecting drop production in Russia. European Union is also calling a new embargo going into the law on the 5th of February, which will probably request more diesel fuel from other countries, and this might rise the prices for the retail target. But the oil prices, the crude oil prices, it's a problem because we've got some rising production in the United States, over 600,000 barrels per day more in this year. Next year, the shale oil, only shale oil, should rise between 300,000 and 400,000 barrels per day. But the shale oil great price for them is about $80 or $90. So we are in the middle, so they can invest more, because please remember that it's not only the inflation that is a problem, it's also an ecological problem, as more and more share owners, shareholders and the banks and everyone else is keep talking about the environment, about ecology, about the climate change. So all that will affect as well the production of oil and every other commodity. So we will probably be on this one, and the recession is a bad thing for oil as it will lower the demand. So we'll have some pre-action made by OPEC organization by last I think it was November, when they cut about 2 million barrels their production. We have also some cuts in Russia. So this is a good thing, but if the recession or at least serious slowdown will affect the market, we should see a huge drop for oil demand. We have some examples in China when there was still zero COVID policy in fully enact. Now they releasing more and more, creating problems for other countries, but still it's showing that the oil demand is rising in China because they're put some release on zero COVID policy. The nearest target for oil is probably $90, where we should reach, and then we should see the market deciding that if we go higher on a technical basis or go down on a fundamental basis, which is slowdown or recession. So this is the situation for the oil market. Quick, short notice that recession is the main thing here. The recent surprise for the natural gas in the United States was a sharp fall from $6.60 to $4 per MMBTU. The thermal unit, the British thermal unit, is still quite high. Of course, it's not so bad if you take a look on a wider screen, which is before pandemic, before 2021 even, that $4 were high. But also please remember the inflation. So $3, which was high there, now it's $4 just due to inflation, nothing else, not a single thing. Okay, this price has a chance to drop more. Why I'm saying this? Because the Freeport LNG was postponed till end of January. They're saying second half of January, but more likely I see it by myself that first half of February is the first realistic term to restart the Freeport LNG export terminal. So that's the first thing. Second thing, we've got quite warm winter everywhere around the world in the north side, which means we've got very high gas stocks in Europe, over 83% total, with over 88% in Germany, which is the higher gas consumer in European Union. We've got easy winter in Asia with very good gas stocks in Japan, South Korea, China and everything else. We've got also quite warm winter. We have this cold vortex in United States in the middle of December. Now it's better. It's of course we have a huge withdrawn from the stocks of gas in United States in the week before the Christmas, and it was pushing the stock levels over 2.5% lower than 5 years average. But still, now we've got usage of 126 billion cubic feet per day this week. This is the average, and usually on this end of December, beginning of February should be above 140. So it's much warmer than it should be. Of course, it's not warm in whole United States, as we've got United States as a big country. So, but still, the demand is much lower. Even that the cold vortex stopped the rails for a couple of days, so reduce possibility to deliver the coal to the power plants. Now it's okay. Now it's fine. So we can expect weather news that will affect this market, or the Freeport LNG. That's the two things that will affect natural gas. But if I had to say something, this level 3.4 is the bottom that we should reach, as it was bottom of December 2021. So I think on technical basis, as at the moment this inflation for the last year, it's this price. But for technical reasons, we'll probably see the bottom and we'll keep driving down for the next couple of days. If nothing changed in the weather, of course, or with Freeport LNG. So I think we can expect that we can expect that this price will fall in the next couple of days. But in general, we should probably see still over 5 in this winter, and then we'll see how this second half of the winter will go in European Union or Northeast Asia. But if it's gonna be much worse than was in this last months of 2022, we'll probably will see a longer period of NatGas above $5 on the February, March, and even April and May. For the gold, the recent Fed comments keep the gold on this rising level. It's a very slow rising level, very slow, going higher and upper. As you remember, this V-shape I made in one of the shows day before this, I think it was 22nd of November. Since then, we are on the higher heights and higher lows. There is a problem because we'll probably stop on next $6-7, and we'll see for some economical and political decisions, and of course the unemployment data and non-farm payrolls that will show up in Friday in United States. So that will be probably the determinant for the next 2 weeks of gold moves. So keep an eye on it and wait till Friday. I think we'll probably reach $1,830 or even a bit more, but please be careful with that because of those unemployment data from Friday that will show up in United States. So this is the gold, quite short notice. Coffee market is also determined by weather and recession, both ways, because first we've got rising stocks on ICE warehouses, and we were going from the difference almost 80% to lower than 48% difference between this year and last year's stocks, and this is what's holding back the coffee from rising, as well as recession. But as to rise the price, we need the worst weather or worst production forecasts for mostly Brazil, but also it's India, Indonesia, Vietnam. And those weather forecasts that will affect the production of coffee is not so great, but recession fears and those rising stocks keep those coffee prices on this 154 and 175, or yeah, almost 75 consolidation price. We don't see anything that might change except fundamentals. So I cannot tell you that it will rise or drop because I don't know what will happen. Probably the weather will become more problem, as we can observe couple years back, for the last couple years back, that the weather is going more strict, more unpredictable, and it's more deep bad conditions. Like it's regular storm become to the deadly storm, and we've got those La Nina, El Nina weather occurrences in South America that's also coming year after year without a break, when there was some breaks in the past. So this climate is changing rapidly, and that's why we cannot say too much at the moment about the coffee market. But what we can say about the moment, at the moment, that there is no snow in the United States, so every frost is probably penetrating the winter wheat in United States. Weather in Europe is great for winter wheat. Poland, France, Germany, Romania, all those countries has a quite nice weather, and the crops should be fine after this winter. But United States crop field, wheat belt, or corn belt, or soybean belt, whatever you call it, or grains belt, is having huge problems, and probably we won't have a full picture of the losses on winter wheat in United States till probably February. So I'm still very optimistic about the wheat, because it's not so much to make changes to switch the positions that demand will be higher than production. It's about 3 million tons only. So if United States will lose 1 million ton, Argentina will lose another extra million ton of wheat, and whatever, Canada, Australia, Russia, China, India, whatever those countries will lose 1 million, we are still have a higher demand than production, and the stocks of wheat will fall. I'm expecting to reach those prices in the next 3 to 4 months, up to 3 to 4 months, something between 920 cents and 950 cents. So this is my wheat forecast, wheat production forecast, that we'll see, of course, in United States Agricultural Department, that will show those data, some data in the mid of January. And I think we can also take a closer look on a silver, which was pushed up by gold itself, and we have a huge chance to reach March 2022 highs, with which is $27 per ounce, if the gold will rise another $60 to $80. Of course, it's once again possible only when we have some news in a proper way on Friday from United States, so that will push gold and the silver will follow. Probably this year we'll also see some more demand for solar panels, which also use a huge amount of silver, so it might rise up industrial demand for the silver, but still it's highly possible that with this high inflation, the silver will follow gold as a safety metal. Not industrial metal, which is mostly is, but a safety metal, a precious metal like gold. So silver will be on the market acting like a gold, while it should be considered as an industrial metal. So recession will be a problem, because we will have no money to invest in solar technologies and things like that. I think it will be enough for today. I wish to say thank you for your attention. Please leave a comment. What do you think about those forecasts? Or do you have any yours? Or do you want some other instruments or other commodities to talk in our next show? So the comment section is all for you. You can always remember to subscribe to our channel, to hit the like button, or to share this video with your friends and co-workers on social media. Thank you very much. Have a nice day, and please enjoy 2023 as far as you can. Thank you.